Thank you very much. Very good evening to all the participants and welcome to you all to this first program of Institute of Chartered Accountants of India by the Direct Tax Committee and GST and Indirect Tax Committee. I recognize the presence of Honorable President C.A. Ranjit Agarwal ji, Honorable Vice President C.A. Charanjit Singh Nanda ji, Chairman Indirect Tax Committee C.A. Sushil Kumar Goyal ji, Vice Chairman C.A. Rajendra Kumar ji, my Vice Chairman of Direct Tax Committee C.A. Kota Srinivas, on the online, and C.A. Sanjay Agarwal ji, Vice Chairman of Direct Tax Committee and the Chairman of Tax Audit Quality Review Board, Vice Chairman of TAQRB C.A. Anuj Goyal ji. Online you can see C.A. Raj Chawla ji. So very well, good evening to this first cut of Union Budget. I would like to clarify, this is a first cut. Obviously, a deep dive has to be still done. The institute is organized another program tomorrow, physically in Delhi at City Fort Auditorium, wherein we have CBDT chairman coming in, Joint Secretary from Tax Policy Legislation, and also again Girish Aujasi would be doing a deep dive into it. So with this opening remarks, this would be concentration on the first cut, the highlighting on the important features of the budget. I would like to go now to the Honorable President of ICI, C.A. Ranjit Agarwal ji, and request him to kindly address the gathering.
Thank you very much, Piyush Chhajar, the Chairman of the Directors Committee, Honorable Vice President C.A. Charanjit Singh Nanda ji. There are three committees who has joined hand together to have this first ever budget program by ICI. Directors Committee led by Piyush ji and Kota Srinivas, in Directors Committee led by Sushil ji Goyal and Rajendra Kumar, and Tax Audit Quality Review Board led by Sanjay ji Agarwal and Anuj ji Goyal. And our tax group, very renowned, hardworking and benevolent and generous, our speaker, Dr. Girish Aujla ji, and all the participants. Thank you very much for joining. Today is the very important day. Today was the budget day. Honorable Finance Minister spoke 1.5 hours, 1 hour for part 1 and half hour for part B, and presented the budget of this new government the third time this new government has took charge. And this was the 7th time a finance minister, Honorable Nirmala Sitharaman ji, has presented the budget. This is the first ever a record. A lady finance minister has presented a budget for a 7th time in a row. And the kind of deliberation, the kind of provision she has laid down on the floor of the house. She started with the inflation is under control of 4%. The PM Garib Annadata Yojana, which 80 crore people has been given food for 5 years, which was announced in the interim budget, was also discussed by her. And she also said that the government has focus area on 4 major important points: employment, skilling, MSME, and middle class. She also spoke on 1.48 lakh crore has been earmarked for the education and employability and skilling of the people of our country. 9 priorities she has spoken, how this 9 priority is going to be the focal area for this government to make this country as a Viksit Bharat in 2047. Productivity in agriculture, employment and skilling, human resource development, manufacturing and services, urban development, energy security, infrastructure development, innovation and research, and next generation reform. So these are the 9 areas in which the government has focused how this 9 area can be developed, and she has explained these 9 areas one by one. The most important part of this important event I can see is the economic policy framework. The government has said they will come out with the economic policy framework, how the reforms in this country can be sustainable and can be reached out in the next subsequent year to reach the objective of Viksit Bharat. There are some very important points which I have noted while listening the budget speech of Honorable FM. National Cooperation Policy, which talks about how the cooperative sector can be developed by this government. They have also come out with an employment-linked incentive for employee or employer. They are saying how the job creation can be done, and instead of PLI, they have come out with the ELI. They have focused on the skilling and the employment of the youth of this country. They are saying 20 lakh youth skilling will be done in next 5 years. How the loan for the skilling loan, they have enhanced to 7.5 lakh rupees per annum. And they have also proposed rupees 10 lakh rupees loan for per student for the higher education. There are some other issues like voluntary closure of the limited liability partnership. They are focusing on the more NCLT benches for the resolution of the insolvency and bankruptcy cases. The IBC, the data was given by the minister. In that 1,000 company, 3.3 lakh crore resolution plan took place. And there are 28,000 company. Before admitting the insolvency process, 10 lakh crore of the money were resolved before admitting to the IBC process. So this IBC is one of the most successful legislation happened in last 6 years. They are also talking about how this economic policy framework for this next generation reform and how this financial sector reform for the vision and the strategy document the government has prescribed to come out with this document. More so, as far as climate change or how this credit finance as far as climate and sustainable development is concerned, they have roadmap for taxonomy for climate change and climate finance and how the green finance. Let me tell you, friends, this is the one of the most important area for our chartered accountant also, how this non-financial reporting will be the key area in the reporting aspect as far as financial balance sheet is concerned. And that's why the climate-based green finance, the credit system of this, all the lender and RBI is going to see change. They have also come out with this fiscal deficit is not more than 4.9% compared to 5.1 in the interim budget. The total collection of the government proposed by 32 lakh crore and the total payment is 48 lakh crore, in which 25.83 lakh crore is the taxation is concerned. As far as this taxation is concerned, our experts are there, but the major important area which instead of this long term and this 56 2B or standard deduction or this some ease of doing business as far as search and the TDS is concerned, they have come out a proposal, the definition of the fair market value as per section 55(2) in the initial public offer is going to be prescribed. They have not prescribed what will be the fair market value, but they have mentioned it will be prescribed what will be the criteria for fair market value for initial public offering as far as section 52 of the concern. And the housing company, they have specified they will become under RBI because they are now the NBFC company. So these are some of the initial comments on this budget. We have a very robust economical aspects presented by this budget. And as far as chartered accountant is concerned, I can see a huge opportunity as far as infrastructure, digitalization, skill development, and financial reporting is concerned. These are the 4 areas the institute should focus in training, skilling our member so that they can join hand in the vision of this government to make a sustainable and Viksit Bharat 2047. Thank you very much.
Thank you very much, Honorable President, for giving the overview of the union budget and appraising the members about the salient features of the budget, including all economic features. Now I would request Honorable Vice President C. Chiranjit Singh Nanda to give his views on the budget, impact on the union budget. Honorable Vice President.
A very good evening, ladies and gentlemen. The Honorable President of the Institute of Chartered Accountants of India, C. Ranjit Agarwal, my Guru, C. Girish Ahuja ji, the Chairman of Direct Tax Committee, C. Piyush Chhajar Sahab, Shri Sanjay Kumar Agarwal, who is again the Chairman of Tax Review Board, Mr. Anuj Agarwal, the Vice Chairman, Mr. Sushil Goyal, the Chairman of Indirect Tax Committee, Mr. Rajinder Kumar, the Vice Chairman of Indirect Tax Committee, ladies and gentlemen, dear members. Good evening, everyone, and a warm welcome to everyone present at today's webinar on the first cut budget 2024-25. I am delighted to see such an enthusiastic turnaround for this critical discussion, which underscores the importance of the union budget in shaping our nation's economic future. You are all aware that budget always has glamorous propositions, but today's budget had certain roller coaster effects. As far as the stock market was concerned, I will take this in the last leg of my discussion. I extend my heartfelt gratitude to all our esteemed speakers and panelists who bring with them a wealth of knowledge and expertise. Their insights will undoubtedly prove clarity and foster meaningful discussions on Union Budget 2024-25. The Honorable Finance
Recording
Minister
in
today presented
progress.
the first Union Budget of the Modi 3.0 government, focusing on employment generation, skilling, micro, small and medium enterprises and middle class. The Union Budget for the fiscal year 2024-25 brings with it several significant proposals and policy changes. Among these, the highlights pertaining to the stock market and Finance Bill 2024 will require special attention. The stock market, being a barometer of economic health and investor sentiment, is significantly impacted by the budgetary announcements and fiscal policies laid down by the government. If I bring forth the budget estimates for 2024-25, the first thing is that the total receipts, including borrowings, are projected at 32.07 lakh crores. Total expenditure stands at 48.21 lakh crore. Net tax receipt is estimated at 25.83 lakh crores. The fiscal deficit is targeted at 4.9% of GDP, with an ambitious goal to reduce it below 4.5% in the coming year. And more importantly, inflation remains low and stable, with core inflation at 3.1%, trending towards our target of 4%. The focus areas are four. First is employment, second is skilling, third is micro, small and medium enterprises, and last, the middle class. Now, some of the key changes related to stock markets. The tax rate of long-term capital gain in respect of listed financial assets taxable under section 112A will be increased from 10% to 12.5%, which is the long-term capital gain. The exemption of rupees 1 lakh also is enhanced to 1.25 lakh rupees. On the other hand, tax rate at long-term capital gain under 112 reduced from 20% to 12.5%. The tax rate on short-term capital gains on certain financial assets will increase from 15% to 20%, while other gains will be subject to the applicable tax rate. The period of holding for classifying a capital asset as long-term or short-term also changed from 36 months to 24 months for all unlisted financial assets and all non-financial assets. And let me very candidly say that number of changes were made which were an integral part of the pre-budget memorandum which was presented by the Direct Tax Committee of ICI to the Finance Minister. Additionally, the security transaction tax on future and options of securities increased to 0.02% and 0.1% respectively. Income received on buyback of shares will be taxed in the hands of the recipient. I want to just clarify that the best part of today's presentation was, the most positive part was the fiscal deficit. The finance minister used the bulk of RBI's dividends to bring down fiscal deficit to 4.9%. In the concluding remarks, when the budget was presented, in the last leg, the NSE and Bombay Stock Exchange both died by over 2%. And the best part was that at the end, it impaired all the losses and the market closed flat. This speaks of the way certain issues in the markets are created which are not logical, asking people to go ahead and make selling in the market, and the market ultimately concludes. To put an end to my discussion, I would like to recite a couplet, a very genuine couplet on the rumors which move in the market and people do not understand the effect. The couplet says, कागज पे लिखी हुई गजल बकरी खा गई. गजल मीन्स अ कपलेट शेर. कागज पे लिखी हुई गजल बकरी खा गई, शहर में चर्चा हुई, बकरी शेर खा गई. So my dear friends, to put things in the right perspective, budget is something which is an annual feature. All of us needs to restrain ourselves when financial assets are being transacted. Thank you so much.
Thank you very much, Honorable Vice President, sir, for giving a detailed impact in such a short time, covering all the aspects of the budget which were touched upon. Before before I go to the analysis and overview about indirect tax, we have between us Vice Chairman of Tax Audit Quality Review Board, CA Anuj Goyalji. I would request him to give his views on the budget. Please, Anuj.
Thank you, CA Piyush Chhajar, sir, our Honorable Chairman of Direct Tax Committee. We are having the presence of our Honorable leaders, our Honorable President, CA Ranjit Kumar Agrawal ji, CA Charanjot Singh Nanda ji, our Honorable Vice President, and of course, CA Dr. Girish Ahuja, sir, our Honorable Tax Guru, amongst all of us in this very, very important webinar. We are having, of course, Piyush Chhajar ji, our Honorable Chairman, Direct Tax Committee, CA Sanjay Agrawal ji, past Chairman, Direct Tax Committee, and Chairman of Tax Audit Quality Review Board. We are having Sushil Goyal ji, Chairman, GST Committee, and CA Rajendra Kumar ji, Vice Chairman, GST Committee, Kota Srinivas ji, Vice Chairman, Direct Tax Committee, and CA Raj Chawla ji, our Honorable Central Council Member, and all the Honorable viewers who are with us in very, very large number, in thousands from each and every part of the world. Very, very good evening. And of course, when President and Vice President has already spoken, and of course, Dr. Girish Ahuja ji is supposed to speak. I'm not supposed to speak much, but I think one of the things which I will like to have the attention of our Nanda sir, that I'm still Goyal, not Agrawal. And
So many
and I think one of the very, very important proposal of Honorable Finance Minister, which may not got the attention of most of the chartered accountants, that in a bid to simplify and modernize the tax regime, a comprehensive review of the Income Tax Act of will be completed in next 6 months. This is the proposal of the Finance Minister, and this will reduce disputes and litigation and providing tax certainty to the taxpayers. And friends, reduction of TDS rates in line with the objective to TDS to serve as an audit trail rather than as a revenue garnering measure. I think it's a welcome move. And the merger of the first regime under Section 1023C and second regime under Section 11 to 13 for charitable trusts will pave way for simplifying the overall tax system for trust, and I'm quite confident that within a given time frame that would be implemented. I will not be taking your further time, as we are very, very eager to hear our leaders, the Chairman Sanjay Agrawal ji, the Chairman of the Tax Audit Quality Review Board, GST Chairman Sushil Goyal ji, and of course our tax group, CA Dr. Girish Ahuja ji. Thank you very much.
Thank you very much, Anuj bhai. Friends, we will divide this session into two aspects. One is indirect tax GST, though there are certain limited proposals which have come under the Customs Act and GST. We'll hear from Chairman and Vice Chairman before we go to the direct tax proposals in detail also. So now I would directly go and request the Chairman of our GST and Indirect Tax Committee, CA Sushil Kumar Goyal ji, to kindly give us the overview of the amendments and the proposals in the indirect tax. Sushil ji.
Thank you, Piyush Chhajar ji, Direct Tax Committee Chairman, Honorable President CA Ranjit Agrawal, Honorable Vice President CA Charanjot Singh ji Nanda, and our tax guru CA Girish Ahuja ji, and all my learned council colleagues available on this webinar. Direct Tax Committee, Indirect Tax Committee, and Tax Audit Quality Review Board. So, although the direct tax people always think that there are minimum changes in the indirect tax, that is nothing wrong the Piyush bhai has done today.
But there is good number of changes in the custom, and we have decided that I will touch upon the custom portion of this particular amendment bill, which is introduced in the parliament today, and my council colleague or vice chairman to this committee, CA Rajendra Kumar P, will discuss the GST amendments, but the section 74A I am going to cover. Friends, the major thing the finance minister informed in the parliament that within 2 years, the entire taxation system will become the paperless. So they have achieved the target up to a great extent, and within the time given, they will remove the paper from the entire system of the taxation. And another amendment which is proposed by, that is the tax litigation policy of the government, that they have increased the limit for filing appeal by the department in the tribunal from 50 lakh to 60 lakh. In the High Court, it is increased from 1 crore to 2 crore, and in the Supreme Court, it is increased to 2 crore to 5 crore. It is definitely a welcome step from the government. It will reduce the litigation, it will reduce the litigation cost, or also it will a major step for the business, and the ease of doing business will definitely be achieved, because if the SSC wins a particular level and government department goes for appeal in the next level, then it creates problems for the department as well as for the taxpayers. So it is definitely a welcome step. Other amendments which are in the Custom Act is related to this procedure regarding the claim of preferential rate of duties. Earlier, the origin, proof of origin was required. Proof of origin is required under as per the trade agreement. In order to align with the said section, new trade agreements which will provide the self-certification. There is whenever there is a double tax avoidance treaty is there to facilitate this, the self-certification from the taxpayer will also be accepted in the after this amendment, and it is welcome step. The government is placing more reliance on the taxpayer itself. They're not required to go get the certification from somewhere else. And this is definitely a new amendment which is restricting the manufacturing activity in a warehouse. Friends, all you are aware, section 65(1) of the Custom Act permits that owner of any warehouse goods may carry out any manufacturing process or other operation in the warehouse in relation to such goods. Now, government has added a proviso to this particular section, that is section 65(1), and this proviso permits government to restrict production of certain items in these warehouses. So this is definitely few items will come after this proviso will be added in the section. Definitely we will see that number of items will be restricted. So far they have not discussed in the budget speech, and we are expecting that minimum item will be there. And friends, Finance Minister herself has mentioned in the budget speech that they are moderating the custom duty on number of products, and list is very big, my friends. The list is the medicine and the medical equipment that the custom duty has been rationalized to provide facilities to the cancer patients or related disease. And friends, one definitely a mobile duty, mobile phone and related products, related parts, the duty has been reduced from 20% to 15%. So this is definitely going to help the growth in the manufacturing sector. That is the wish of the finance minister, that it will help the manufacturing sector in the country by reducing the duty of the mobile phone and the mobile parts. And there are duty reduction on the critical minerals also, almost 25 critical minerals. The BCD has been reduced, and on two items, sorry, on 25 items, duty has been reduced to nil, means the duty has been removed, and on 2 items, the duty has been reduced. There is solar energy. We all look for the solar energy in the country. It is a very eco-friendly energy, which is renewable also. So solar energy, also they have reduced the duty for import on the solar energy, capital goods, and solar cells and panels. The marine products, also the duty has been reduced to 5% on certain items. So it will help the marine food, sea items, the marine seafood export in the country. That time will definitely prove it that this reduction will definitely increase the export. Similarly, it is done for the leather and textiles also. The number of machines and other raw materials which is used for the manufacturing of these items has been reduced. The precious metals, the duty has been reduced, and one of the precious metal is the gold. The duty from 10% is reduced to 6%. I think all the housewives or the females must be celebrating this move from the finance minister, because it is directly reducing the 4% price of the gold, and definitely more occasions, because we are moving towards the festival seasons, more occasions to buy gold people will get. Other metals, there is also substantial cut in duties, electronics, chemical and petroleum products, plastics, telecom equipment, and even the trade facilitation has been done for the this ships coming, ships for the repair, that is MRO, as maintenance, repair and operation purposes. The period has been extended from 6 months to 1 year. But friends, this directives people will talk about the Vivad Se Vishwas scheme, which the indirect people were looking after, that finance minister must provide this scheme to at least the custom cases where this scheme has been launched, not given for a long, for quite substantial time right now. So we were expecting this, and even for these 2 taxes, that is central excise and the service tax, these 2 taxes are almost, the service tax is totally removed, excise duty is almost removed on the larger part of the products. So there are number of litigations. Now we have completed 7 years of this changes, that is the service tax and the excise duty. Still, good number of cases are pending in the department itself, or in the tribunal, or the High Court and Supreme Courts. If some sort of scheme, Vivad Se Vishwas scheme for this indirect tax people, custom and excise and service tax may be given, it will definitely going to help the industries. Now, last topic for my discussion is the section 74A, the proposed section in section 74A of the CGST Act. That is, that will be first and foremost thing that will be applicable from the financial year 2024-25. Before that, till the financial year 23-24, the section 73 and 74 will play. That we all know, 73 is for normal period, 74 is for the extended period of limitations where fraud or any misappropriation has been purposely done by the taxpayer. So now the new section will have this element of the suppression or will fraud or willful suppression, this evasion of taxes. This will not be there. There will be a common section, section 74A. Time period for the section 74A will be 4 years, that is the 48 month, and the execution or the order to be passed by the officer within 12 months. That may be further extended to 6 months. So section 74A, which was proposed in the 53rd GST Council meeting, is now part of the finance bill. Other amendments in the GST Act will be dealt by my Vice Chairman, Rajendra Kumar P. But before that, I passing over the mic to the Piyush Chhajar, who is moderating today's session very wonderfully. Thank you.
Thank you very much, Shishirji. Obviously, after listening to you, I'm sure participants will realize, and even I have realized that there are a lot of amendments in indirect tax, but we generally compare how much time Finance Minister has given. But thank you very much for giving us a perspective, friends. Just for the information of members and Guruji, whose people are around 4,500 people have joined, and already questions have started coming. So I'll come down to you. Before that, we'll take a final impact on indirect taxes, and the vice chairman of our GST and indirect tax committee, who will also throw up lights on some key highlights of indirect tax proposals, apart from what Sushil Bhai has already mentioned also on that. So I would invite and I would request CA Rajendra Kumarji to kindly address.
Thank you, Chairman, Direct Taxes Committee, CA Piyush Chajetji. We also have our tax guru, Girish Ahuja ji, my chairman in the GST committee, Sushil Bhai, Sanjay Agarwal ji, and on the screen we have Pota Srinivas sir and Raj Chawla ji. Esteemed friends, as all of you are aware, about 37 to 40 amendments have been carried out in the CGST Act per se by this union budget. In fact, there are not numerous changes that can be brought in the union budget by the GST because of the fact that the GST Council recommendations need to be taken into consideration, and anything that comes in the budget has to be recommended by the GST Council. So following that, the extra neutral alcohol, in fact, it is a purest form of alcohol which is used in numerous preparations in food, etc. Very recently, we found a mention of this in the preparation in the sanitizers which are being sold throughout during the course of COVID. So the extra neutral alcohol which is used in the manufacture of alcoholic liquor for human consumption is kept outside the purview of GST, and numerous sections wherever there is a reference of section 73 and 74 is there, they have been replaced with 74 capital A. But there is one provision in the central excise law which empowered the government to regularize non-levy or non-payment of a duty because of the general practice prevalent in the trade. The same has been inserted now as section 11A in the CGST Act. The central government the government is empowered to regularize the non-levy or short levy of any particular commodity with due to general practice in the trade and industry. With respect to the issue of invoices by the recipient of services in cases of reverse charge, that has been introduced to provide for time of supply of in services where the invoice is required to be issued. And a very happy amendment, friends, with respect to the ITC, which has been taken in the years to 2017-18, 2018-19, 2019-20, and 2020-21, where the return has been filed, regular return has been filed under section 39 up to the 30th day of November 2021. Wherever these returns have been filed proper and wherever the ITC have been denied, an extension has been granted, and this has been made effective from 1st of July 2017. And friends, with respect to the registrations, in fact, numerous instances of cancellation of registration, suspension of registrations, all those things have happened since 2017. The trade and industry is grappling with this problem, and many issues relating to non-availability of ITC, many issues relating to disallowance of ITC have happened. In fact, putting to rest all those instances, it has been now clarified that there will be a possibility of taking this ITC where there is a revocation and cancellation of registrations. And in fact, the government is also going to prescribe conditions and restrictions for revocation of cancellation of registration. In fact, it has always been a hot topic. There's nothing like this as to how a revocation can be done. It is now going to come into the law books, friends. In fact, with respect to the registered persons who were tax deductors under GST. All of you are aware that there will be a monthly return that has to be filed. Now here, a section has been introduced where the provision, where the explanation inserted clarifies very clearly that even if there is a nil return, even if there is no TDS which has been deducted, yet return should be filed. Of course, this will take, all these amendments will take cognizance only from the date they have been notified. There's always a confusion that nil return need not be filed by a tax deductor, but that has been set to rest, friends. And the other provisions with respect to the zero rated supply of goods, where such goods are subjected to export duty, no refund of unutilized input tax credit. Specific amendment has been introduced in the section. Well, ladies and gentlemen, these are the few provisions in the GST law. Other provision has been discussed already by my chairman Sushil Goyalji, and the customs law provisions also have been discussed. So thank you very much. We'll come back to you in detail in due course with more clarity after we read the fine print in detail. Thank you very much. Piyush ji, thank you very much, Sanjay ji, and thank you very much, everyone from the studios here of ICAI. Thank you very much.
Thank you very much, Rajendra Kumarji, for covering indirect tax amendments. The first cut on indirect tax, as rightly said, I'm sure the members would require further deliberation on that because this is the first cut, as I had clarified earlier also. Coming to direct tax, friends, will move on to the direct tax. We have with us Girish Ahuja ji, Sanjay Agarwal ji. I could see on the screen Raj Chawla ji and Kota Srinivas ji. Briefly, as you all know, there are a lot of amendments been made in the direct tax provisions. And obviously, when I was just going through this explanatory memorandum, I found that, sir, that it's an old wine in a new bottle. A lot of the provisions which were there historically has come back. I am sure Sanjay Agarwal ji would be throwing light on what is this block assessment. A lot of new members would have never heard of this block assessment, but it has come. Similarly, reopening of the assessment, which was earlier 10 years, now something has been triggered, it has come down to 5 years. Earlier it was 6 years only. So I think so they are reverting back to a situation which was 4 years, 5 years or 20 years back. And they want to, the government is actually, they would have compared it, that what is the difference, what is the practical difficulties which are coming up. Just a very important thing. Just take an example of, again now, 5627B, that is, which was coming on the screens, like abolition of angel tax, which was a long-standing demand of the various startup companies, wherein initially the tax on the any excess premium received on the excess of fair market value was been taxed since 2012. It was only limited to resident. Hereafter, they brought a tax on non-resident, also was covered 3 years, 4 years back. Now, obviously, it seems from the first cut that they have removed completely. They are proposing that from 1st April 2025, 5627B may not be applicable. Of course, obviously, 56-10 may remain on the statute book as it looks now. And the transfer, interstate transfer of the shares may continue to be taxed. But it is a very significant step. I understand that the one of the view of which the government would be feeling is the idea of 5627B was to tax the non-genuine transactions. And I believe government feels or the department feels that section 68 is already there on the statute book to take care. So why genuine cases which were getting struggled or they were getting hurt by 5627B should not happen? And I see a very positive move coming up on this particular aspect also. Similarly, there is, as I said, reopening of assessment, which was from, of course, I've already said it has been reduced to 5 years, but it is a very good thing which I believe they have been done. I don't want to go into the capital gains tax because other members would be also speaking on that. But a very other significant change which I could see is in regard to buyback tax. Now, this buyback tax, which was been paid by the companies, was being used by a lot of closely held companies, which I believe, because if they would have want to distribute their capital and if they would have resorted to repay the dividend, that is reserves and surplus, sorry, not capital, reserves and surplus, they would have been paid, the shareholders would have paid higher rate of dividend tax, and therefore they would have resorted to a buyback wherein the lower tax rate was applicable as of now. But now it says they made an amendment in deemed dividend stating that I could I could read the explanatory memo. They said that even a buyback is as good as distribution of the profits. accumulated profits. And why not? Therefore, it should be included in the definition of dividend, and they have brought subclause F to 2 subclause section 2 subclause 22, whereby now any buyback which is done even under the Companies Act, whatever amount has been distributed would be taxed as dividend. So it would definitely suffer a higher rate of tax. But what will happen to my capital, which was invested for buying these shares? Obviously, in the explanatory memorandum, it says because there would be an extinguishment of right and I will get a capital loss in this regard. But how the capital loss would be calculated? Again, indexation is in question because I believe proviso in section 48 has been removed for all type of assets. So I may not get an indexation to that. But still, how the capital loss would be calculated, in which year it would be allowed, in the same year or in the succeeding years, what happened within the years, what happens in the carry forward position. I'm sure this all questions will arise when we actually go into deep dive. I'm sure the Ahuja sir would be also taking up this because it's a very important. As I said, another aspect which is again going back to an old is removal of equalization levy. I'm sure the government would have realized that there is not much collection happening in the equalization levy, and it has been removed. It's a positive step. If a particular amendment in the law which was brought in through equalization levy, and if it is not giving a desired results, I think so there's no point in continuing that to a certain extent. And that's a welfare, you correct it over a period of time. That's what all the budget is about. You keep on taking. You see the how the amendments have moved, what the amendment was done, what was the objective. If the objective is achieved, you may do an amendment. If it is not achieved, then you may have to look into it, whether this needs to be continued. And actually, it should be reviewed on time to time. It's this government, and then this budget, it has been done on the various counts. That's what I was trying to put a point to it. So before I go to Sanjay Agrawal ji, I'm sure he has a very great liking on this block assessment. And before we go to Ahuja Saab, on the screen, Raj Agrawal ji is there, who is also, Raj Chawla ji is there, who is also an expert on the taxation, individual taxation. I'm sure he would be touching on this. I would request Raj Chawla ji, if you can throw some light on direct tax provisions which you feel would be of important for the members. Yes, Chawla ji, please.
Thank you, Piyush Bhai. Good evening, everyone. Honorable CA Dr. Girish Ahuja ji, our tax guru, CA Piyush Chhajar ji, Chairman Direct Tax Committee, CA Kota Srinivas ji, Vice Chairman, CA Sushil Bhai Goyal, Chairman Indirect Tax Committee, and CA Rajendra Kumar ji, Vice Chairman, CA Sanjay Agarwal ji, Chairman, our TAQRB, Taxation Audit Quality Review Board, and CA Anuj Bhai Goyal, Vice Chairman, and all the members watching this show. The most important amendment which I have noted in this today union budget is the change in slab of new scheme and the standard deduction increase from 50,000 to 75,000. As our honorable finance minister also spoke that around 4 crore people will be given benefit up to 17,500, means thereby around 50% of our taxpayer will be benefited by this change in slab and standard deduction. Because our tax guru Girish Ahuja ji is here, so we are here to listen him. So from my side, thank you, Piyush Bhai.
Thank you very much, Rajbhai. Thank you very much. As rightly said, individual, everybody has been benefited at least by 10,000 rupees. That's what we have also understood on our first cut. And if we accelerate, possibly we will get a benefit of 17,500. Over to you, Sanjay Agarwal ji, the chairman of Tax Audit Quality Review Board and my past chairman of Direct Tax Committee. Thank you very much, Sanjay bhai, for joining us. Please, your views on the budget and specifically on search assessment, which is your favorite subject.
Thank you, Piyush Bhai. Honorable Dr. Girish Ahuja ji, my guru, my mentor, and Chairman Direct Tax Committee, Piyush Chhajar ji. On my right, my Vice Chairman and old friend, Anuj Goyal ji in the TAQRB. And on screen, we have Dr. Raj Chawla and our Kota Srinivas ji, Vice Chairman of the Direct Tax Committee. I'll just say a few words about that. In this budget, we have found that a lot of new things have been touched, and wherever it is possible, they have tried to
give rationale also, and also the small amendments are making a large impact, and we need to go and find out in details as to why these amendments are being made and what is the impact. As we will read line by line, and by tomorrow, Dr. Girish Ahuja will look into each and every uh, point which is arising out of this. But just I would like to say, so far as the new search assessment procedures which has been introduced in this budget, there is a history behind this, that prior to 1st July 1995, the search assessment used to happen like only normal assessments. When uh, the government think that the assessment of the search are to be dealt by a separate chapter, so they brought from 1st July 1995 a system of block assessment. And this remained till 31st May 2003. Uh, this particular block assessment have gone into a lot of litigation, and by the time all litigation have been settled, the new 153A assessment procedure have been brought, and they continued from 1st June 2003 to 31st March 21. And 153A, lot of litigation, specifically the Kabul Chawla, Visar, Bill, Weld, etc. By the time these have been settled down, the new regime of treating the 148 as the such assessment, and then not having the satisfaction for 3 years, and then increasing the period for 50 lakhs and more for 10 years or so. So till 31st of August 2024, this assessment of such assessment, especially 148, and with some of the carve out in 148, especially regarding the satisfaction, etc. Now, 158 BA, which is akin to the block assessment under section 158 BC and BD, this is now coming on searches, which is going to have after 1st September 2024. So friends, this is being given in this. Small changes about the block period. Earlier it was 6, then it was increased to 10. Now in this block period is also 6 years. So the levy of interest, taxes, all these details, 60% tax, and then how the satisfaction equivalent to the 158 BD in cases of undisclosed income is found in the other person cases. So that is also there. Then 158B about talks about the various time limits for completing the such assessment, which is now not based on the end of the financial year. It is based on the month in which the search takes place. And one more thing which is important is this: the interest under 234 A, B, C is not being levied now, and no penalty under section 270 A is there. Our specific penalty have been brought in this, and the penalty is on that particular additional tax. Few more things, the reference to TPO for getting the extension, reference to TP adjustment also, reference to DRP, etc. They are being dispensed with it. We need to go into detail as to what will happen, whether any issue which is arising out of search has to be dealt for DRP, where the foreign transactions are there or TP transactions are there. These are the things which we have to see. The prosecution is also being incorporated in case you find that you don't file the return under 158 BC. And also the approving authorities are also being defined as the additional commissioner or additional director or joint commissioner, as it was done in the case of the previous regime also. So friends, this is the small amendments which are there in respect of the search assessment. And I would like that I should rest right now for this. We'll come back to you with more and more details in this regard. Thank you, Piyush bhai. Kindly over to you.
Thank you very much, Sanjay bhai. Very rightly mentioned about the search assessment. Thank you. 60% flat rate on the block assessment. That's what Sanjay bhai is saying. Now you are paying tax at regular rate, plus you are paying interest and penalties under 153A assessment. But my only worry is there is a lot of frequent changes which are happening. I was been assessed under 153A. Now I would, for 3 years period, I would be assessed under 148A in case of search. And now again under a block period. So there is a lot of frequent changes which are happening. But as I said earlier also, if the objective is not achieved by a particular section, if it is leading into a litigations, as you mentioned rightly, that were a lot of judgments in regard to 153A, what would be incriminating material. But I think so that still on the first cut, it remains that the concept of undisclosed income, concept of incriminating material may continue, but then let us read final. When we go into a deep dive, we may know. I'm sure Ahuja Sahab would be also covering up tomorrow also. As I said, we have a deep dive series tomorrow also, and it would be telecasted live, though it would be physically held in Delhi. I would request all the members to please join. As I said earlier, CBDT chairman is joining. A joint secretary from TPL would be also joining, and again Ahuja Sahab would be joining. Apart from tomorrow's program, which is happening in Delhi and telecasted live, there would be one physical program also happening in city of Ahmedabad and one physical program also happening in city of Mumbai, where Gautam Doshi would be deliberating on the intricacies of the direct tax provisions. And then one in south of Thiruvananthapuram. A lot of programs this time direct tax committee is trying to do for the benefit of the members. They all will be live telecasted. So please keep on looking into that. Thank you very much. Now I would directly go to our Guruji, whom we call CA Girish Ahuja ji, the expert in direct tax, whom we are all waiting since last to listen to him. I would request Girish Ahuja Sahab to over to you, sir. Kindly take us through the direct tax provisions. Thank you very much, sir.
Good evening to everyone. Chairman of the Directors Committee, CA Piyush Chhajarji, very energetic and of course, very learned man. I was listening to him earlier also, but I found him really update there. Yes, of course, we have past Directors Committee Chairman, CA Sanjay Agarwal ji, equally intelligent person, no doubt. We have CA Anuj Goyal ji. They are very worried about their, elections also, but I'm not coming to that part now. In front of me, of course, on the screen, CA Dr. Raj Chavla ji, CA Kota Srinivas ji, other dignitaries. Let me tell you, sir, my question is, there is a section called 222, which talks about dividend. And dividend also includes dividend. That section was 222A, B, C, D, E. Everybody knows what is E. Loan advance given or something like that. Everybody knows what is A, B, C, D. Now a new clause added, section 2, clause 22, sub-clause A, stating that if you receive a payment from a company for the purchase of its own share, sorry, the entire amount received shall be taxable. That is what is 225 says, will be taxable. Under which section? 56 section. It is dividend. Of course, it is dividend. Dividend is always taxable under income from other sources. But that becomes now a dividend. Since it is a dividend, the question of that 1034A, one buyback of share was there, or 115QA, where the payment of the if the company was supposed to pay tax at the rate of 20% plus 12% plus 4% for buyback of share. But if it is a dividend, the tax rate is 30%. Maybe for companies and company may be less, otherwise for individual, it is 30% so far the highest rate is concerned. And then there is a surcharge also, then there is what you call education tax also. Now, everybody was trying to use that buyback channel so that to avoid tax, to pay less tax as compared to dividend tax. Now the question is, whatever amount you receive for on account of buyback, full amount, no deduction of cost. Please note, already rightly pointed out by our chairman, Piyush Chhajarji, all amount, the entire amount received will be treated as dividend. And section 57 says, no deduction whatsoever on account of this dividend. But at the same time, 194 section, dividend, where the TDS has to be deducted. So here also the TDS will be deducted under 194, because earlier 194 was for section 222A to 222E. But now 222F is also covered under 194. So TDS will have to be deducted at the rate of 10% in case there is a buyback of share and you receive payment from that. They will deduct, the company will deduct TDS at the rate of 10%. Secondly, the PUJ asked me, what about the cost of the share? Sir, they have added 46A. In the 46A section, the proviso has been inserted saying that cost of a consideration, that's something what cost. Consideration of that will be nil, deemed to be nil. Consideration will be taken as nil, but you have a cost, meaning by nil minus cost, there will be a capital loss. That capital loss can be set up as per the capital normal provisions of capital gain under section 74. So the idea is consideration deemed to be nil. When the consideration is deemed to be nil, there is a buyback. In that case, what happens is nil minus the cost, capital loss. That capital loss will be taxable, can be short-term or long-term. But let me tell you, buyback is as per section 68 of the Companies Act. And there are provisions that you cannot do buyback. Somebody says, we will do buyback immediately now because it is applicable from October 2024. If you have done any buyback, only few days, there is a period of 9 months, if I'm not wrong, for buyback again. So please be careful. If you have already gone for a buyback, don't go for it because it is not required, not allowed under section 68 of the Companies Act. So this is what I was saying as regards 222F, read with 115 QA, read with 46A, read with 194, read with 1034A. These are the changes only for one item. Second item, short-term capital asset, long-term capital asset. The law has not defined what is the long-term capital asset. Law says long-term capital is one which is not a short-term capital asset. They have given the definition of a short-term capital asset. Earlier definition was 3, 12 months, 24 months, 36 months. 12 months was for listed share other than a unit. 24 months was unlisted shares and immovable property. And for the rest, it was 36 months. First thing, 242A, listed securities. Earlier you said other than a unit. Unit omitted. That means all listed securities, including the unit, the period will be 12 months. That listed can be debenture, that any period will be 12 months. Second, all other capital asset, including of course unlisted share, including of course immovable property, the period is now 24 months. Now you sell it after 24 months, long term. If you sell shares after 12 months, long term. The difficulty is in the case of immovable property or gold, you were allowed to assume the market value as on 1st April 2001, everybody knows, and thereafter the indexation was allowed. Now they have put a proviso under 48 section, has been amended. They said that indexation will be allowed only up to asset sold or transferred on or before 23rd of today, July. So if you have transferred before 23rd of July, absolutely no problem. The old provisions will be applicable. But if you have transferred on or after today onwards, 23 onwards, then please note all capital gain will be taxed, whether it is 112A or the capital gain under 112 will be taxable at the rate of 12.5%. What has happened? 20 has been brought down to 12.5%, but indexation has been done away with. As regard listed share, it was already under 112A, where indexation was not allowed, and it was taxable at 10%. Now it has been raised to 12. There may be some person who will be benefited by paying 12.5% because indexation is only up to 3.63 times. Indexation up to 3.6 times of 2001 rate. Sometimes what happens is indexation, you have bought a thing for long back for let's say 1 lakh rupees. Market value on 1st April of that immovable property may be 10 lakh rupees. Today, if you multiply by 3.63, it is 36 lakh rupees. But now if it's a grave, and then you get to sell it for 20 crore rupees, probably you will be benefited by paying 12.5% and without taking an indexation. It depends, facts of the case will be different. In some cases, they will be benefited. In some cases, they may not be benefited. And like Mr. Sanjay Agarwal was saying, in the case of a gold, there used to be a loss. There used to be a loss also if you take a price, but now the question is indexation is not allowed, and that's why you will be liable to pay tax at the rate of 12.5% and not 20% after indexation. Right, sir? Consequently, what has happened, sir? Let me tell you, 48 provision indexation removed, 112A limit has been raised, that exemption limit of 1 lakh has been raised to 1,25,000, a small gain. Of course, here 120, I have already given you 242A change, 111. This was expected. I was telling whenever I have gone all over India delivering lecture, I always said two things are expected. One is short-term, long-term, short-term capital gain 111A will be raised from 15% to 20%, and it has been done. And I was also saying 112A, not for other essay. I didn't know for other essay. 112A will be raised from 10 to 15, but it has not been raised to 50. It has been raised to 12.5%. It was earlier 1038 fully exempt, then it was brought to 10%. Now it is 12.5%. Markets are going up, and they think the people will be able to absorb the 12.5%. So that is the point which is there. But look here, unlisted ventures, unlisted shares. Now, please remember, it has been brought into 50AA, meaning thereby they will be liable to tax at the rate of 20%, no question of any short or long, always 20%. Unlisted debentures, otherwise indexation was not allowed. Unlisted share, it was allowed, but they have said nothing doing. Now, these will be taxable under section 50AA along with market-linked debentures or specified mutual fund. 50AA will be taxable at the rate of 20%, minded. Earlier it was treated as short-term capital. Now it is 20%, no question of short-term and long-term. So this is what has happened. Consequently, because of this rate of change from 12.5%, 10 to 12.5%, all sections related to 115AB, 115AC, 115ACA, 115AD, 115E, wherever long-term capital gain was written and it was said it is taxable at 10%, will now be taxable on or after 23rd July at the rate of 12.5%. All section change accordingly, let me tell you, but this is applicable from 1/10/2024. Clear, sir? The next change, section 16. Don't think the 50,000 has been increased to 75,000. That 50,000 increased to 75,000 only for new regime. Those who are under the new regime, that is under section 115BAC subsection 1A. Those who are under the old regime, their standard deduction will remain 50,000. Their standard deduction will remain 50,000. It is only when you are under the new regime, probably they wanted to do away with the old regime. They have not touched it, but they have not given any benefit of any nature under the old regime, neither in the slab rate, nor in any deduction, nor any exemption at all. So they are not interested to continue with the old regime. I can't tell you here, but I know the reason why this old regime is continuing. So I'll tell you sometime later. Next point. Due to this, they wanted to give you a benefit of little bit in slab rate, as rightly pointed out by our chairman, Piyush Chhajarji. That's the slab, which was up to 3 lakh in the new regime, nil. Next 3 lakh was 5%, next 3 lakh was 10%, next 3 lakh was 15%, next 3 lakh was 20%, and above 15 lakh it was 30%. They've changed the slab. 0 to 3 exempt quota. 3 to earlier was 6. Now it is 3 to 7. Meaning thereby that 1 lakh above 6 lakh, which was taxable at 10%, will now be taxable at 5%. So benefit of 5%. Right, sir? Next is 7 to 10. 7 to 10, earlier it was up to 9. Up to 9. 9 or above was taxable at 15%. Now 7 to 10 will be taxable at 10%. Again, a benefit of 5,000 provided you are under 10 lakh. If you are less than 10 lakh, it is a different thing. If you are more than 10 lakh, 10,000 benefit, no benefit further, because 10 to 12 is now what you call 20%. Earlier it was 9 to 12. So what I'm trying to explain, a little benefit has been given to everyone. Don't think it is 10,000. Please note, those who are covered, a person like me who has to pay surcharge of 25%, I get a benefit of 10,000 plus 25% plus 4%. And even salary, which I get 75, this 25 with 30%, 7,500. But I save also surcharge on that 7,500 if my income is more than 50 lakh or 1 lakh or 2 crore. So that surcharge as well as the education tax. So basic advantage is 17,500. Otherwise, it can be more. But 17,500 advantage is only when you are above 10 lakh. Am I right, sir? When you are above 10 lakh. So that is the point which they have done. A very important thing about 28 clarification which had been added. Earlier, if you could carry on a business of letting out of house properties, and that was taxable under 28. And when the income is taxable under section business and profession, you are allowed to take a lot of deductions. But now, if there is a residential house and you are letting a residential house, it has been clarified that it will always be taxable under the income from house property, that Chennai properties and all that judgments of Supreme Court gone. If there is a residential property let out, it can never be a business income. That has been clarified. Maybe commercial property, again, there is a problem. As regards stock in trade under 23(5), more than 2 years deemed to be let out. It is already under what you call income from house property. Next change, sir. National pension, new pension scheme. You know, in the case of government employee, the employer could contribute 14% of the salary of the employee. Whereas in the case of non-government, it was allowed only 10% deduction. And even 80cc2, the deduction was allowed only up to 10% of salary. Now for all employees, whether government employee or non-government employee, employer can contribute instead of 10%, 14% of salary, and the employer will be allowed deduction under section 36, subsection IVA, section 36(1) IVA. Deduction not 10%, now 14%. 80cc2, because this contribution by the employer is added to the salary, now 80cc2, you will be allowed deduction of 14% instead of 10%, because the employer contributing 14, it was income, now you can get 10%. So this is the another change which has taken place. Now 40B, salary. I have been telling people firm is different from partners. 45(3) you have already seen. 45(4) you have already seen that firm is different from partners. And now, even if you give salary or interest to the partner, you will be required to deduct TDS under section 194T. A new section inserted, 194T. Somebody has asked me that we give it at the end of the year. Please note, partnership deed tells you what is the system. The gentleman name I can give you, Vinod Kumar Banka, FCA, said, sir, whether it is applicable on partner salary, but once decided after the end of the year, even at the time of audit, please don't tell me. The partnership deed must contain the clause for the remuneration. The partnership must contain the clause for the interest. And interest you may give not monthly, you may give yearly. That is a different story. You have to deduct tax at the time of payment or credit, whichever is earlier. So if you are collecting at the end of the year interest, you deduct at that time. If you are paying interest every month, you deduct at that time. As regards salary also, TDS will have to be deducted. Please note 194T, they are trying to capture every information, because there are people who may not show that income. They are trying to capture that information, but one benefit given. Earlier, you could give salary maximum 90% if the total income does not exceed 3 lakh, 90% or 1,50,000, whichever is more. But now that limit was 6 lakh. 90% of the income or 3 lakh, whichever is more. That benefit is given to you. That benefit you can always take it under 40B, but you will have to change. Please note your partnership deed. Whatever written in the partnership deed, that is important. You cannot give less than the partnership deed. So what I'm trying to explain, please note 40B limit, which was on first 3 lakh 90% or 1 lakh 50,000, whichever is more. Now it is on first 6 lakh 90% or 3 lakh, whichever is more. Balance, of course, is 60%. So that benefit has been given under 40B, which you can take if you want to do it. I don't want to use the word, I will have to tell you tomorrow also. So some provisions I will definitely escape. 44 BBC, cruise, shipping, cruise and all that. I will not say. One point. Let me tell you, please note 5627B, which rightly pointed out, people saying angel tax, angel tax. Angel tax was otherwise, exemption was given. You had to value as per 11U82. But now everyone, whether is unlisted or listed, when you are giving whether to resident or non-resident, no, it was unlisted, not the unlisted, otherwise was not there. When you are a company with public are not substantially interested, if we want to issue share, earlier you could not issue more than the fair market value, because if you are issuing more than the fair market value, the difference was taxable in the hands of the company. But now, due to you are taking a route of what you call angel tax, it is for everyone now. I can issue the share at any price. 10 rupee share may be given at 100 rupee share. Nobody can stop me. And if it is more than the fair market value, 50C210 will also not be applicable, sir. 50C210 will be applicable only when I give it for inadequate consideration. If the consideration is more than the fair market value, there is absolutely no problem in that case. So that point will still hold good. Next one, small addition made under 139(9)(a). I'll tell you the technical thing, because when you were taking a condonation of delay under section 119 subsection 2 clause B, they were saying there is a now 119(9)(a) says if the condonation is given, it will be treated as a return filed on 10. That's the point, just a technical thing they have said. Changes are there in 158B, as Abhi rightly pointed out. Sir, please note, 115 PB has not gone, and 113 says where total undisclosed income. They have removed the word undisclosed under 130. So what about the undisclosed income? If it is 68, 69, 69A, 69B, 69C, can they extract 115 PBE even if you are covered under block assessment? Please check up.
Sir, we'll see.
No, you see the 130.
Sir,
Please,
because here they are levying the penalty also.
Sir, levying the penalty. There also they are levying the penalty. There the penalty is 60. No, sir. 271, the penalty is 60%. Here the penalty is 50% of the 60%. There also it is 60%. Please read in between the line. I have not read. I am not expert on a search because I don't want anybody to be searched. But in any case, you can look up that point. That search assessment. There is 115 BBE. No, nothing has been said that this is done away with. There is 113 where they have used the word undisclosed has been removed. Only 113 was already there. There the word was total undisclosed income. So what is the purpose of removing undisclosed? The purpose is 115 BB may continue. Please see that. I'm not saying I have not read it. I just pointing out the thing which we have to think into that. Something very important. All deductions or TDS rates have been reduced on 194D, 194DA insurance commission or commission of 194G, or life insurance commission 194D 522, 522, 194G lottery ticket 522, 194H brokerage commission 522. Like 194O and 194N. And 194IB was also there, rent above 50,000 if you are paying, and you are not covered under 194I. 194(1)B was there if the rent is more than 50,000. There the rate also was 5% reduced to 2%. The rate under 194O has been also reduced. 194 rate has been reduced from 1% to 0.1%. And whereas under 194M, that if you have given under to workman, individual HF who are not covered under 194C, or they were not covered under 194J, or not covered under 194H, they were supposed to deduct TDS if the amount paid was more than 15 lakh. That 5% also been reduced to 2%. So that point is reduction of TDS because they were having complication later on. And 192, very important, 192, very important, please. Earlier, if you had other income, other income TDS was deducted, you could give the other information and the TDS, they was adjusting it. But TCS was not being adjusted, sir, under 192.
Right.
Now even TCS, because you have sent the money abroad under LRS, TCS has been deducted. Salary man is there. He will be looking after for that. So you give that information of that, the TCS benefit will also be given while computing the tax rate. So that benefit is also included, but no loss. Loss is only for house property where they can adjust. So this is a good proposal that we told 192. They have done a very nice thing in this case. 198. You earn an income from abroad. The TDS deducted there or the tax paid there is 20%. You get 80%. People were showing 80% as income. They said, no question. Your income is 100%, 198, complete income, including the TDS, you have to add it up. Clarity, just for the case of clarity. And something very important, my dear, do not buy jewelry more than 10 lakh or anything more than 10 lakh because new thing has come. Motor vehicle, already TCS was there if it is more than 10 lakh. Now, other goods to be notified. To be notified. Definitely jewelry will be notified, sir. Will be notified, and if it is more than 10 lakh, they will be supposed to collect TCS at the rate of 1%. My point is, please be careful. You will be put into difficulty if you are buying LV purse more than 10 lakh. Let me go and buy this. They will say, we are going to collect the TCS at the rate 1%. And the moment it is collected, you have to show that this is happened. So please careful, many things will come of certain good, only goods, please, only goods. In the case of goods, this is section 206C 1F. 206. In that case, please note, if it is more than 10 lakh, like motor car, TCS will also be collected at the rate of 1%. I don't want to continue anymore. If you want one thing, in the case of Commissioner Appeal, if you get yourself assessed under 144 because you have not filed any paper, assessment is done under 144. Earlier, Commissioner of Appeal assumed the role of a what you call assessing officer. He is the assessing officer. He can't set aside and give it to the AO. But now, if you have been assessed under 144 and the commissioner, if you have filed an appeal against to the Commissioner of Appeal, the commissioner may set aside the case and give it to the assessing officer, which earlier was not allowed. This is under 251. That point is also mentioned up to. I have many other points, but sir, we have 15. We have 15-20 minutes. What will I do tomorrow if I tell them anything? I can take the questions which are there. That will be much better than giving you more. Let me have the fine prints also, sir. Sometimes you commit a mistake in giving something because we have read only in 1 hour's time. How much you can read in 1 hour, 2 hours time? So that's what I'm saying. But you have a question? Can I answer this?
Yeah, I'll take
please,
it up.
please.
So I'll just take up some questions before also going to some other amendments. The question is raised is, of course, it's very clear. Most of them you have answered also. Person from Trivandrum is asking whether change in long and short-term capital gain is with retrospective effect from 1st May 24 or with immediate effect.
So it is immediate, 23rd.
Immediate effect. Sir, 20% tax on short-term gain on certain financial assets. What are the assets?
Only those covered under 111A.
111.
And then unlisted share and debentures on 50. That is under what you call 50AA.
So tax rate of 111A has been amended from 15 to 20%, where STT is paid.
Yes.
So unlike
STT.
in case of financial assets where STT is not paid, will continue at
101%. You are right, sir. 101%.
Sir, there is a very great question asked by one chartered accountant from Lucknow. He says there is some decriminalization of TDS defaults have happened, which I believe that if TDS has been
It is not retrospective.
deposited before the due date of filing the return, then they
Quarterly,
should not take
quarterly statement.
quarterly statement. They will not resort to prosecution under 276B. Would it affect the cases which are ongoing?
I'll have to check up which date it is applicable. We'll have to check up. But according to me, already filed, how can they give benefit of retrospective effect? But still we can make out to find out. Good question. Let me check up.
Yeah.
Data.
No, but I think so amendment is saying it's a prospective only.
That's what I'm
It's a
saying. That
prospective.
appears to be a
But
prospective.
definitely, sir, a court of, it's from effective 1st October 24.
Yeah, then the prospective.
But whether
They said they will bring new guidelines.
Let's
guidelines.
Let's see. Let's
Sir,
see.
in fact, on this count, our institute has also made a suggestion that when the person is coming and depositing TDS himself, and from his statement you are initiating a prosecution, you should remove such cases.
I fully
They
agree.
have done to certain extent, but only up to due date of filing. We have requested them through a circular, if you can at least put that in such cases, no action should be taken, which though he has deposited delay, but by his own filing, you have come to know. So that is that. Sir, obviously, the very important question is coming. Of course, you have answered it, and everybody is worried about why indexation benefit of long.
Sir,
Is
I
there
was-
any logic behind it?
I'll tell you. I'll tell you.
Yeah.
I'll tell you.
Yeah.
The point is, people are taking the benefit of indexation at times. And we come out with a next, rate also every time they, what are they are saying? That please, we want to simplify the law. Pay 12.5% interest. And we have brought down from 36 months to 24 months for all assets. So why do you want indexation only? You want, let me tell you, it will curb black money. It will not increase black money. It will curb black money because I would like to sell at a higher rate, at a rate which is applicable because I have to pay tax only 12.5%. Indexation benefit may be there, but maximum index benefit is 3.63 today. Am I right or wrong? Maximum 3.63, which can be less than 3.63 also. Maximum 3.63 is only because of 1st April 2001. In 23 years, the benefit is 3.63 times. Am I right, sir?
Right.
But if you work out on a sheet of paper, 12.5% will be much better in most of the cases. Most of the cases, I'm not saying all cases, because property rate at that particular point of time was much less. Property has gone up too much at this time. So, 2001 property rate may be 3 lakh. 3 times of the 3 lakh is 3.63.
Sir, what will happen is basically indexation was been granted for loss in value of money. I'm just taking an example. If you see last 5 years, 10 years in the metro cities, the property prices have not increased. So in fact, I was claiming a capital loss in that cases, which I was getting a benefit against the other profits which I would have incurred.
Maybe because of that they have done it.
Maybe because of that. And that loss was a genuine loss because I was losing the value of the money, and therefore would have, and it's hurting a lot. In fact, we are considering.
I would say the other way around is
Mm.
because of 50C and the price maybe the market is more, we are getting it registered at 50C. They were saying we are losing the money.
Actually,
Now they would like to sell it at more and then you get only 12.5%.
Yes, Sanjay.
actually, what I wanted to say, because of the valuation being given for 2001, they might be thinking that it is having a cascading impact of the indexation also. And as such, to curb all those things, not to have a cascading impact, they have made the taxes at a lower level.
I think it is simplification.
So, no, they've covered it under rationalization and simplification.
Simplification.
Whole capital gains, they say, I want to remove all those slabs. I want to make it more easier.
You should be
I got-
happy they have not touched 54B or
Yes,
anything
they have
else.
not touched.
You should be happy for
Sir,
that.
in fact, we would be considering whether we should make a post-budget request on this indexation. Sir, other problem which you touched upon was on TDS on salary, obviously. Sir, most of our chartered accountants are aware that in the partnership, they say that the salary would be paid according to which is allowable under section 40B. They don't pay fixed salary that I'll pay 20,000 per month. They say it would be paid in accordance with 40B. Now that accordance and what is actually payable is determined sometimes at the end of the year and may not be at the end of the year when I actually file the return of the partnership form. So how to give an implement this?
That
to
was
this?
already a dispute.
Mm.
They say you have not quantified.
Mm.
You have not quantified the salary. There was certain judgment in favor also, even if not quantified, if you write it as per the 40B allowed and something like that, they will do it.
Mm.
But let me tell you, now you will have to quantify. You will have to quantify it and you have to pay according to the partnership deed.
Mm.
Most important is the partnership deed. You cannot change partnership deed with retrospective effect. So my question is, they want to see that whatever salary you are giving, If you are taking monthly, deduct monthly. But at the same time, if you look up the other employees, they are given monthly salary. Now, at the account partner, you may say, no, I'll give you at the end of the year. You are trying to make it. But this has been already settled now. There is, although no employer-employee relationship, but for the purpose of income tax, now there is an employer-employee relationship between the firm and the partner. There is an employer-employee relationship. Why TDS otherwise? But of course, section is different because employer-employee relationship is 192. Here it is 194T. Therefore, section is different because you may not go to the court of law where is the employer-employee relationship. So that's why they have brought in different section. 194.
Sir, you would just small, if anything, cut out small cut on trust, it seems that.
Yes, I forgot to tell you.
Yes, sir.
You know, I remember when this 10(3)(c) was amended about in 2021. There were earlier 15 proviso, there were 23 proviso under 10(23)(c). And under each proviso, there is an explanation. Explanation 1, explanation 2, explanation 3, and if you forget 2A, 2B, this type. I told them when section 10(23)(c) IB, V, 6(a). I'm not talking about less than 5 crore. Provisions are now similar, except 9A. But they are similar. Why are we having two types of provisions? So they were thinking we will do it. Now very cleverly they have done it. They have not changed anything. They have said that from 1st October 2024, no approval under section 10(23)(c). The matter is over. That means you come under 12A automatically. The approval under 10(23)(c) will be granted only if you have applied there. Now, 5 year is going to be lapsed. I mean, in 5 year renewal. There also 10(23) gone.
I have to go to 12.
You will have to go to 12. A new one also have to go to 12. So they have said now more than 5 crore or notified charitable institution, notified religious institution under 4 and 5, hospital under 6A. They will all be now under the section 11, 12, 13. Rather, it is beneficial. One question was New Noble Educational Society, which was solely for educational purposes. Now they can do incidental business also. Where is the problem under 11, 12, 13? Here there was a problem.
Yes.
You were conducting exam, you were already finding a difficulty in that.
Yes.
11, 12, 13 is better as compared to 10(23)(c). New Noble Education Society will put us in a difficulty. So the purpose is have the same, when there is same law, why have two different provisions? And you can't remember provision 16, provision 19, provision. So that's why to make the simplification, it was my proposal, request to them, sir, please merge them. Right. It has not been merged. Right. What has been done is
Sunset clause.
Already sunset clause, but please note, in accredited income, 115 TD, they had said, if you don't take approval under that, you will be liable to pay tax under 115 TD. That has been done away with now, because you have to go to 11, 12 by force. You will have to go to 11, 12 after a period of 5 years, or new will have to go immediately under 11, 12, 13 from 1st October. So automatically 115 TD will not have any impact on it. It was section 115 TD subsection 3 clause 3I, which was putting us into difficulty.
Yes, Sanjay.
There are two things which participants are seeking your indulgence at this time. One is they are asking, is there any clarification regarding the 87A rebate, the control?
There cannot be any clarification. There is a mistake given. Please note, if you want me to if you give me 3 minutes, I'll explain this why they have done it.
Yes, please.
Yes, sir.
Should I explain?
Yes, sir, because everybody has to file returns.
You know, 7 lakh is the limit under new regime. And suppose I give them illustration, suppose you have other income 5 lakh and short-term capital gain 2 lakh. Sir, 2 lakh. Clear? On 2 lakh, the tax is 30,000 earlier. I'm not talking about now. 30,000. On 5 lakh, the tax was 10,000. Am I right, sir? 40 lakh, 40,000. How much rebate you get? 25. Am I right, sir? 15. You have an income of 7.5, 705. 705 addition. You have to pay tax only 5,000. How can it be possible? If you are less than 7, but you are having short term, you are paying 15. You are more than 7, but again short term is 2. You are paying 5,000. So they realize that this kind of a mistake is done. Now they have done away with special rate. But the language used is under this chapter. that under this chapter gives you impression of 87A subsection 1. There also it is under this chapter. That chapter is 8. But here they said if your total income has been computed as per 115 BAC, then you under this chapter means 115 BAC chapter, which is chapter 12. Language faulty. They should have written under chapter
There
12.
will be a lot of litigation.
Litigation, but under, they should have written under chapter 12. So, sir, you look up 115 BA, 150 BAA, BAB, everywhere it is written under this chapter. But they are not written anything under this chapter other than लिखा है, इसलिए आपको समझ में आ जाए. But what I am trying to explain, their purpose was this. Now language is faulty. They either litigation will be there or they will have to clarify this thing. But according to me, they don't want to give any benefit of special rate under 115 BAC.
The second odd question is about, is there anything which is there in 43BH?
Nothing is there so far. हमने तो बहुत कुछ सोचा था, sir. But she has said that we will defer it. Not has been deferred. Of course, institute is there to give post-budget memorandum, and they will definitely say you had promised for 1 year. Ideally, at least defer for 1 year.
Sir, institute came with implementation guide on 43B subclause H. And in fact, we have been telling our members also that we also per se, because when we went to CBDT, they said that we'll go to MSME. Ministry of
they will
Finance,
say.
and it's not with the Ministry of
Yeah,
Finance per
correct.
se. And we were also been told at one place that when the associations represented, they said that we are happy with this problem.
Yes.
So they would have been saying to chartered accountants, all the clients are coming to you that they are not happy, but when their association goes, that's why I had a very limited.
I fully agree with you, sir. And this law is from the 2006, not today.
Right, sir. Sir, one more, which of course I could see when the amendments came, was in regard to giving a power of condonation for a delay, whereby the trust used to lose its benefit and accreted income would have been taxed if they would have not applied within the provision of that. I think so now.
That benefit has been given now.
Now condonation
Yes,
power has been given.
Yes,
to
yes, it has been given under 12 AC.
Yeah, so genuine trust should not suffer.
12 AC. When 80G also they have given that benefit.
So if now that's a good thing, which I believe, because a lot of people were worried. In fact, when we were also doing our.
That is the reason 139A has been inserted. That power of 12A condonation, power of that condonation, and then we have added 139A only to say that will be treated as 130. That is it. Take another point, 139AA. You could also file a return, or you could also apply for PAN by saying that enrollment ID. Just give the enrollment ID number, you could do it. Please note, from 1st October 2024, no question of enrollment ID. You have to have a Aadhaar. That is what they have said under 139AA. अब इतने final print पूछ रहे हैं मेरे से. What do I do?
Then if final print we have only for a first cut, obviously when we go into that, I think so there may be much more coming up.
I'll definitely.
I'm sure when you are deliberating tomorrow, once again, there would be
Then,
much
yeah,
more.
there will be so many print prints. You know.
But sir, in this whole budget, the one thing which I saw was very good, that everything is prospective. And it's the first time such amendments have come, which
No,
is
retrospective is
today.
also there.
One retrospective I could see,
Yes,
that was coming, sir.
Pre-issue of IPO shares.
Yes.
Pre-issue of unlimited share when you are going for IPO.
Right.
In the case of IPO,
Right.
normally you pre-IPO issue are made to the unlisted share. And they said, we will get the benefit of 31st January, what we call 2008.
Cost of acquisition was not there,
Yeah.
calculated.
We will take fair market value at date. They have done retrospectively that if we have given pre-IPO issue, when we have offer for sale, kindly note, you will not be given a benefit of
Sir,
fair market value.
So what is happening in this, I just said, what was happening is wherever the new company was coming with an IPO, in case of offer for sale, they were saying that I am an unlisted equity on that particular date. So
But I'm listed on 30%.
So there is no cost of acquisition method prescribed under section 55 to calculate. So once the cost of acquisition is not there, capital gains computation is failing.
That also was
And
the
then
point. That
therefore
was
no
also,
tax would be levied.
sir, but that purpose is not there. They had given a notification also. I don't remember, it was 64 by something. That notification had given the benefit that if it is pre-offer for sale, you can get the benefit of 31st January what you call 2018. They don't want to give the benefit of, because listed, they have not paid STT on that.
Right.
That benefit is, according to me, is the only one retrospective. Maybe lot of litigation which were there, now they will have to pay tax in it.
Sir, my last question, of course, before I go to my Vice Chairman Kota Srinivas for his concluding remarks and his views on budget also. Sir, there is some scheme again coming on direct tax Vivad Se Vishwas scheme 2024. And any thoughts about that? Because obviously the direct tax Vivad Se Vishwas scheme came up, and we also came with a publication. It seemed to be a very successful scheme. Can we expect that this scheme would be also in line with what is earlier? Of course, scheme is not there. I've been told Sanjay bhai ke kuch to aaya hai, something, but I have also not able
I have
to
not
lay
read.
any hands on that. If it comes, obviously we'll discuss tomorrow. But any expectation, because when we were also meeting with and we had also, in fact, Institute had given a suggestion on this, that there are CIT appeals which are pending, running into lakhs, and they are not passing order after faceless appeals have come, and it's more than 400,000 appeals, more than 10 years appeals have not, and I believe that would be one of the trigger point for coming DTB. Sir, any thoughts? What
Maybe this may be for that penny stock, which is some courts have given judgment in favor, some have not given in favor. Everything is pending in the Supreme Court. Maybe they want to do away with that dispute and may have come out with a scheme. I don't know, sir. I have not read it, but it is a good thing.
right?
We should avoid dispute.
Correct.
And settle those views as fast as we can.
Right.
It is good scheme. I don't know what kind of a scheme is going to come, but they must have given a thought. And let me tell you, equalization levy, only 2% one has been abolished. Still 6% is there. It is only for those 2% where it has been done away with,
Done away.
but 6% is still there.
Yeah, so it was not removal, which I was understanding. When I
Equalization,
made
complete
it
removal is not there. It is
Correct.
only 2% which was added later. That has been done away with.
Okay, 2% has been, otherwise it confused. Sir, so I believe, of course, Sir, Vivad Se Vishwas should be very good. It should reduce litigations for the professions. I would now, sir, like to move on to Kota Srinivas ji, who is my Vice Chairman of Direct Tax Committee, have his thoughts on it. I know he was a very important propagator. He said that this TDS on partnership salary should come. And I said, Kota, please, we don't want this. We don't want this. I remember Kota sir is
No, it
laughing
is
over
not
that.
my fault. It is Mr. Kota's
Also,
fault.
yeah, and of course, we didn't make that suggestion, but we were discussing. But he was of that, let income tax return of the partnership firm and the individual be mapped. That was his idea, basically. So, Kota ji, please over to you.
Namaste, sir. Namaste. Am I audible?
Yes, yes, please.
Yeah, sir. The dignitaries on the dais, we have the chairman of DTC, CA Piyush Chajat, and the chairman, vice chairman of TAQRB, Sanjay Kumar Agarwal and Anuj Goyal. And of course, we call him as a tax guru, the walking encyclopedia, I should say, CA Dr. Girish Ahuja. After Girish Ahuja sir speaks, there is nothing left for others to speak, but still, as a opportunity given, let me use for 5 to 10 minutes. Basically, I should say one of the things, of course, this particular budget, if you see the economic survey that was released yesterday, most of the budget, the proposal that has come is in line with the economic survey. Usually, sometimes the economic survey will be something, but budget will be something. But this time, we should say that we should be happy that most of the economic survey, whatever they have done, the budget proposals are in line with that. So to coming to the budget proposals with respect to the direct taxes in finance bill, to give the statistics, there are 87 clauses in the finance bill 2024 with respect to the direct taxes. There are some 77 sections which have got amended. There are some 4 sections which has been substituted. 3 new sections have been inserted and 1 section has been omitted as such. Coming to some of the points which I need to discuss, of course, we are very happy that there are some rationalization and simplification of tax measures have been taken up. So we, in fact, when the finance minister came to Bangalore in the month of maybe April, we had a discussion, and I had also requested whether there is something proposals for rationalization of GST and simplification of TDS. She said that yes, we are discussing those things, and I'm happy that both the things have been implemented. That is rationalization of GST rates and simplification of TDS rates. Coming to other rationalization, simplification of taxation of capital gains, which Girish Ahuja sir has said, in with respect to the capital gains, there are certain things that has been rationalized. There are three components to the simplification. Firstly, as he said, there were three period of holdings: 12 months, 24 months, and 36 months. Now it has been reduced to only two periods, that is 12 months and 24 months. For all the assets held beyond 24 months, it is considered as long-term capital asset. Less than 24 months, it will be considered as short-term capital asset, excluding certain type of assets where it is 12 months above and 12 months below. Then second is the rate for short-term capital gains under provisions of section 111A of the Act on STT paid shares, which was earlier taxed at 15%. Now it will be charged to tax at 20%. And on long-term capital assets, where it was charged to tax under section 112A with a basic exemption of rupees 1 lakh. Now it has been increased to 1,25,000, but the tax rate has been increased from 12% to 12.5%. And in most of the cases where it is a long-term capital asset, the rates have been increased from 12% to 10% to 12.5%. And most of the cases from 20% has been reduced to 12.5%. So that is one welcome measure, I should say. For most of the capital gains, the rate is 12.5%. Thirdly, there is one major impact, I should say. I feel this should not have been done. They have scrapped this indexation. Second project of section 48 scrapped this indexation. All of us are aware, if there is any property or other assets that has been purchased with a base year of 2011, today the indexation is almost 363, almost 3.63 times because of inflation. Now they have scrapped that. Only the differentiation is between the holding period. So if there is a property held for 24 months also or 21 months also, it is the same. But if it is held for more than 120 months also, the things will be same. So this was something which was not expected. Maybe we should represent and see that whether it can be reintroduced, that is indexation. Then some of the other provision amendments that have happened. Of course, Finance Minister has revised the tax rate structure in the new tax regime, 115 BAC. The revised tax slabs will result in 17,500 income tax. In fact, during the budget presentation, the Finance Minister said almost 2/3 of the returns that has been filed now is under the new tax regime, that is under section 115 BAC, which was made a default scheme from last 2 years. Maybe we were, maybe personally, I was expecting that the old tax regime will be scrapped, but still they are maintaining that old tax regime. But when these amendments take place in the coming years, almost 90 to 95% may go in for new tax regime, and slowly this old tax regime may fade away. So now the 6 slabs were there earlier. Now also the 6 slabs is continuing, but with the change in the structure. It was every 3 lakhs there was a tax structure. Now first structure is 0 to 3 lakhs nil. 3 to 7 lakhs they have made. Instead of 3 lakhs, they have made it as a slab of 4 lakhs, 5%. Then again, they have come back to 3, 7 to 10 lakhs, 10%, 10 to 12 lakhs, 15%, and 15 lakhs and above 30%. And the standard deduction to be increased from 50,000 to 75,000 and a new tax regime. And of course, even for this pension, family pension, wherever the people are getting that instead of 15,000 has gone to 25,000. There's one thing, sir, Girish Ahuja sir, there's one doubt I have got with respect to 87A. Earlier, the rebate was up to 7 lakhs, they were eligible. Above 7 lakhs, they were eligible, and the rebate was 25,000 or tax payable, whichever is less. Now, up to 7 lakhs, now also there is no amendment in section 87A, but they say that up to 7 lakhs, the tax amount will be 20,000, but rebate is 25,000. So, is there any things that needs to be amended in 87A? Because a person will be eligible for 87A up to 7 lakhs. For 7 lakhs, the tax is 20,000 in the new tax regime. Sir.
Whichever is less.
Yeah, whichever is less. Now 25,000, there won't be tax liability of 20,000.
How much was the 3 lakh bill? Another 3 lakh 15,000. Another 3 lakh 1 lakh. How much?
4 lakhs, sir. 4 lakh.
It was 25 earlier. Earlier or 7 lakh, it was 25.
Right.
Only this year, it it has been reduced by 5,000.
5,000.
That's why, and they have already said 100% or 25,000, whichever is less.
So
So
then-
earlier we have 25, now 20.
So now only you get,
They have taken away, one minute, sir. They have taken away the benefit of the 25,000, which you have taken a benefit of this TD, standard deduction. That has been covered here.
Correct, sir.
That has been covered. That 25,000 benefit is negated by this. They're very clever, sir.
and simplification of TDS provisions, lot of sections have been simplified, and a lot of rates from 5% to 2% has come, and 194 O, where it was 1% has come to 0.1%. One more amendment is section 197, where earlier 194 Q was not available, means such persons were not available to claim 197. Now it has been added. And one more clarification has come in 194 1A, where we had more number of transferees or more number of transferors. There would have been some confusion. Now it has been clarified. So these are, I should say, as the first cut budget, where we can say that these are some of the changes, amendments that has happened. But overall, if you see, this is part B, what we are discussing. If you go to part A, where there are a lot of things that has been allocated to various sectors. Now, as an institute and as a chartered accountants, we should see what in where ICA can help the government in implementing all these budget allocations. And as chartered accountants, we should also see where are the opportunities for chartered accountants, the practicing chartered accountants or members in industry, where there are opportunities, so that they can also increase their professional opportunities and also guide their clients in such a way that they will make use of all these budget proposals. So just to give an example, there are a lot of initiatives taken by the government. Maybe they wanted to set up various what you call this storage facilities in more than 400 or 500 districts. So the chartered accountants can help those particular districts which have been identified. They can guide their clients to do all these things. So these are some of the things, the first cut budget proposals. As the chairman said, tomorrow we have one more session where even our chairman CBDT is coming and addressing the members. And of course, by tomorrow we may get some more in-depth analysis of this. Our Girish Ahuja sir also will be there. Should I propose a vote of thanks, chairman, or?
Yes, please.
Yeah. So with this, we conclude this session as a first cut budget. This is every year. I think ICA is doing this, and with a very short notice, people would have come and we would have discussed the proposals. For this, I should also thank the entire DTC committee, the staff of DTC committee, headed by the Secretary Priya and all her colleagues, who would have also helped us in analyzing this budget. I should thank in absentia the President Ranjit Kumar sir, Vice President Charanjot Singh Nanda sir, and also the Chairman and Vice Chairman of GST Committee, Indirect Taxes Committee, Sushil Kumar Agarwal and Rajendra Kumar. Of course, we have the convener and Chairman and Vice Chairman of TAQRB, Sanjay Kumar Agarwal and Anuj Goyal sir, for giving their views. And of course, the Girish Ahuja sir, as we know, the tax guru, who is always will be at one step, will be in ICA. Whenever we call, we will never say no, and he is our good friend, guide and philosopher. He will come and guide all of us. And I should also thank the chairman of DTC, Piyush Goyal, and Piyush Chajar, sorry, under under whose leadership all these programs are happening. And tomorrow we'll have a bigger program at Siri Fort, New Delhi. I welcome each and every one of you for that particular program. As of now, good night to each and every one of you. Namaste.
Thank you very much.
Stay healthy.
Very good evening and stay safe, stay healthy. Thank you. We'll end this session. Thank you.